So welcome to Investing for Value. So today I want to talk about the oil prices. So as you would have seen, they went to zero. Well, technically the actual price didn't go to zero. It did go down by quite a lot to about $12 if you're looking at West Texas. But it was actually in the May contracts for West Texas oil that actually came down to zero, even negative. So to just clarify what West Texas is, so when it comes to oil, there's two main standards when it comes to pricing. So there's Brent crude, which is more like the Middle East and Europe. And then when you've got West Texas, that's like North America. So that's why you have the different names for the oils. And then they're also different pricing because West Texas is very, it's very local. It's US, it's like Canada and all areas like that. So everything's very local. But when it comes to Brent crude, it spans over continents like Middle East and Europe. So there's a lot of other factors like delivery costs to take into account. So when you look at the pricing and the pricing's a lot higher, that's because there's quite a few difference in factors. Though when you look at the US, you're looking at West Texas. So when we're looking at like a futures contract here, at $1.54, it's actually gone up quite a lot from, not too long ago, when it was at negative. So basically when it was negative at, I think it was like this article right here, it's like negative 37.63 per barrel. So what does it mean when it's negative? When it's negative, it means they're paying you money to take the oil off their hands, which is like kind of bizarre because when have you ever heard where you give a product to someone and then you're also paying them money to take it? So it's kind of strange to really hear that. Like I never thought I'd ever hear this with oil, but obviously things aren't great. Your storage facilities are filling up right to the brim, and there's just nowhere to store this oil, and no one really wants to take it. So they're basically like, if I take the delivery of oil, I don't have a storage facility or I don't have anywhere to put it, so I'm just gonna pay people basically like a disposal cost to just take this contract off my hand, so they take the oil. Because like if you hold the contract, usually you have to see it through where you take the delivery. Like usually a lot of investors will buy up these contracts like with no intention whatsoever of actually taking the delivery of oil. They're actually hoping by the end of the expiry they just sell it on to someone else. But obviously they couldn't do that, and there was a big panic and a big rush to just get out, and hence why it went to negatives. This was just a May contract, so this was like next month when it's delivery. No one really wanted to take the oil, but you can look at something like January, like June. June oil contracts are like $20. So it by no means is the oil price, zero or negative. It was just this contract was coming up for expiry, and then people just want to get rid of it. But if you actually look at the current oil price, for West Texas is around $12, which is still extremely low. So we've got this headline here: hundreds of US oil companies could go bankrupt. So basically, to sum it up, at $20, they're thinking 533 US companies, in terms of exploration and production, could go bankrupt at $20 if the price does not rise any further. It's not a good situation. And if it ever gets to $10, which at the current situation it's at $12, so if it ever gets to $10 and it stays there for very long, it's gonna be, we could end up with 1,100 bankruptcies in the US. So when you consider that, it's not a good situation. So they've got this graph here, and then you can kind of just see what happens with the different oil prices. Like this is like a summation of all. Like if it's $10, it's all three of these added up. If it's just $30, it's just a 170, and if it's $20, It's like the 170 plus the 393, and if it's at $10, then it's, if oil prices are at $10, then it's these three numbers summed up. So you can kind of see that it's not a great situation by any means, and they're basically projecting this if it goes to 2021. So this is quite a high projection in terms of they're looking at the long term and going, if things don't get better, oil companies are going to collapse. So, but if they're looking at by the end of 2020, if oil prices at $30, we'll see about 73 companies collapse. If oil prices at $20, then we'll see about 140 collapse. And if oil prices at $10, we'll see about 437 collapse. Which, when we add this up, and we just say if all these companies, go down, we're looking at 600 plus companies won't do very well. So yeah, that kind of sums it up. That low oil prices are not good for anyone. The main contracts have sort of recovered because obviously the price was quite low. When it's negative, everyone's wanting to take it, because I mean it's like free oil and free money. But yeah, it's kind of weird. So do let me know what you think about this situation. Obviously I haven't seen it before, you probably haven't seen this before, so I'd love to hear what you think about this, or if there's anything else you want me to talk about. Very open to different topics around investing. Until then, good luck investing, everyone.